Good morning. It's Friday, the 8th of March, and this is Govindraj Ethiraj broadcasting from Mumbai, India's financial capital. Our top stories and themes for the day: the Reserve Bank of India and the Securities and Exchange Board of India move in concert in near and rare coordinated actions. Gold continues its run, hits a fresh high in anticipation of interest rate cuts. Passenger vehicle sales continue to surge. What the Reserve Bank of India governor thinks of Ferraris. More airports coming in India. Global air traffic is up 17% in January. And breaking down the old rural-urban consumer divide with Rama Bijapurkar.
This is a core report with Govindraj Ethiraj.
Markets steady, gold up. The markets stayed steady for another day, largely on expected lines, as markets rarely hold on to gains beyond a few days and appear to move in an upwardly moving band, if that makes sense. I guess the point is that it is moving upward. The BSE Sensex ended up at 74,119, that's up 33 points, while the Nifty 50 closed at 22,493, that's up 20 points. Amongst top large cap gainers, Tata Steel, JSW Steel, and TCS gained over 1% each. Gold, as we spoke yesterday, continues to race away, setting a new record globally once again. Other precious metals, by the way, also went up sharply after the Federal Reserve Chairman Jerome Powell reiterated the US Central Bank would likely cut interest rates this year. Bullion hit a fresh high of about $2,152 an ounce, while palladium broke the $1,000 an ounce mark with gains of more than 10%, according to Bloomberg. Powell reportedly said in Senate hearings it will likely be appropriate to begin lowering costs at some point this year, but made clear that they're not ready yet. He also said he's not looking for inflation to reach the central bank's 2% target to start easing policy. Now, the market has seen some very interesting expectation management. Going by the earlier prognosis, the interest rate cuts, or the first of them in the United States, should have happened about now, which is in the month of March 2024. Obviously, they've not and are not, because the potential cut was pushed to June, which is when most people are expecting it to happen now. Gold has climbed 5% over the last 5 sessions, a move that has surprised some in the markets, Bloomberg said, because there has been no major change in expectations for when the Federal Reserve will lower borrowing costs. Now, like I said, June is the month in the crosshairs either way. From a market's point of view, bullion makes sense in general, that is, when interest rates drop because of the likelihood of appreciation. The rupee is now stronger. Back home, the Indian rupee ended strong on Thursday after hitting its highest level in 6 months during the session, according to Reuters. The rupee closed at 82 rupees 78 paise against the US dollar, compared with its close of 82 rupees 82 paise in the previous session. While the rupee has climbed to a peak of 82 rupees 73 paise, which is the highest level since September, the rupee, as we've been discussing here, has been moving in a band as well, but one where the Reserve Bank has some role to play. Reuters said the dollar index, a closely tracked global indicator and trigger for other currencies, was slightly down at 103.18, hovering close to its weakest level in a month, hit on Wednesday. Other Asian currencies are also strengthening, by the way. Financial regulators are coordinating their attacks. It's quite clear now, as we've been discussing, that the financial regulators, that is in India, have been tracking a potential systemic risk in banking and financial markets for more than a year or even 2 now, given the various actions, with some very visible, like the business ban on Paytm banks, specific product or even service bans on Bajaj Finance, IIFL Finance, and now JM Financial, and these are only some of them. It is also clear that the primary regulators, Securities and Exchange Board of India for capital markets and the Reserve Bank of India for banking systems, are synchronizing to some, if not a great extent. On Thursday, SEBI barred JM Financial from acting as lead manager for any public issue of debt securities due to a violation of regulations, and this is an interim order. Now, this comes after the Reserve Bank of India also barred JM Financial products from doing any form of financing against shares and debentures because of what it called serious deficiencies with respect to loans sanctioned by the company for IPO financing as well as non-convertible debenture subscriptions. Now, in this case, SEBI says it undertook a routine examination in 2023 and found that a very large percentage of securities issued changed hands on the day of listing, as a result of which retail ownership came down sharply. SEBI says it then found that JM Financial Products, a non-bank finance subsidiary of JM Financial, acted as a counterparty to the trades of these individual investors and had also provided the funds deployed by these investors for subscribing to the issue. So it was in some ways playing the market on both sides. On the very same day, JM Financial Products offloaded at a loss a significant portion of the securities it had acquired from these investors to corporate investors. Prima facie, SEBI seems to have concluded that the scheme involved getting individual investors who would have otherwise not participated in the issue to make applications, not just by providing funds to them, but also by assuring them an exit at a profit on the listing day. Now, this was obviously meant to get around the caps on the different categories of investors. So if you were a retail investor as opposed to being an institutional investor, you may have had a better chance or a good chance of getting an allotment in a obviously very hot and booming IPO market. SEBI said that market integrity and fair price discovery have been compromised. Now, in the case of existing mandates where JM Financial is a lead manager, it's been allowed to remain so for a period of 60 days from this order. Auto sales are strong again. Passenger vehicles saw a record-breaking February with sales moving up 12% to about 330,000 units as compared to 293,000 in February last year. Automobile retail sales in all were up about 13% to about 2 million compared to 1.79 million Feb last year. The Federation of Automobile Dealers Association attributed this to enhanced vehicle availability, improved demand due to economic conditions, and the impact of the marriage season. The FADA also pointed out that they were still concerned with elevated inventory levels in the passenger vehicle segment at about 50 to 55 days, and urged original equipment manufacturers or car makers to adjust production to reduce dealer carrying costs. So, general elections are going to sweep the country later this month, but auto dealers feel that this could lead to deferred purchases. Two-wheeler demand is strong, also thanks to more products, including in the premium end. Interestingly, the three-wheeler market, which we've been talking about for some time, represents 53% of total growth. Ferraris and the Reserve Bank of India. I know we seem to be spending a fair amount of time on the Reserve Bank's actions and reactions, but I must return to it for a moment for what I would call a flavor story. Most of our discussion has been on the action of it, or perhaps the logic of it, as viewed by the core report at least. And then, as banking journalist Tamal Bandyopadhyay pointed out to me earlier this week, this is a new Reserve Bank of India, or RBI. The RBI Governor pointed out in an interview to television station ET Now a day ago that the Reserve Bank acted against Paytm Payments Bank because of consistent non-compliance rather than a grudge, that's my words, against fintech companies. He also added in a term and phrase that's indicative of much more than just a car going fast that you may own and drive, which is a Ferrari has to still obey traffic rules to avoid accidents. The use of the word Ferrari, if I might take a few liberties, is not accidental. Rather, it reflects a clear disdain for not so much the car in question or its value, of course it also reflects the value, but the people who likely would buy such a car with the greater intention of breaking rules rather than just to be the proud owner of a fine and legendary piece of engineering. It also reflects the regulator's increasing irritation with 40-year-old venture-funded entrepreneurs with evidently and often zero understanding of trust or risk, lecturing the Reserve Bank and other regulators on how they are perhaps behind the times when it comes to technology. The governor also pointed out that he was focused on entities that were regulated by the Reserve Bank and not other companies within, let's say, the Paytm combine. But then SEBI, of course, regulates listed companies. While there is nothing to indicate that there is any action coming from SEBI right now in the case of Paytm, it's very likely there would or could have been some form of coordinated inquiry and examination of the businesses. New airports are coming. In the last day, I've caught 2 flights from Mumbai to Delhi and back, and both were delayed, one by about an hour, the second by about almost 1 hour 45 minutes. Air India, which could of course borrow a whole book on passenger service from its sister company Vistara, was an hour late going out of Mumbai, and Vistara, to be fair, was late by about 1 hour 45 minutes out of Delhi into Mumbai, apparently because also of runway restrictions in Mumbai. But the experience was not as chaotic as in Air India, where there appeared to be no standard operating procedure for example, boarding passengers, and appeared to be a fresh pattern randomly thought of at that very moment by the manager at the gate. Now, Mumbai, of course, is constrained till the new airport in Navi Mumbai across the harbour kicks off next year, if it is on time. But the new runways in Delhi do not seem to be making much difference in Delhi either. Now, this is my experience not from just these two flights, but several flights in recent months. Meanwhile, I guess one can hope that your point of origin and destination are some of the newer airports that are likely to come up. The government is reportedly lining up inaugurating about 15 airport projects, the Economic Times says, adding that Prime Minister Narendra Modi will inaugurate the projects, which includes new terminals of Delhi, Lucknow Airport and Pune Airport. The other projects include new airports at Chitrakoot, Shavasti, Azamgarh in Uttar Pradesh, and new terminals in Belgaum, Hubli in Karnataka, Jabalpur and Gwalior in Madhya Pradesh. Just to give you a sense of what's happening elsewhere, Delhi Airport is also building larger terminals to double its capacity from 20 to 40 million. Elsewhere, airports like Lucknow are seeing massive expansion and investments. On the other hand, India's airport infrastructure, which is the elsewhere part, appears severely strained already. Aviation consultancy firm CAPA has said that Indian airlines have an order book of 1,600 aircraft, that is 2.5 times the size of their existing fleet. Global air passenger traffic up in January. Speaking of aviation infrastructure, air traffic and demand measured in revenue passenger kilometers was up about 17%, while capacity measured in available seat kilometers was up around 14% in the month of January, indicating a strong start to the year according to the latest figures from Geneva-based International Air Transport Association or IATA. Within that, international demand grew faster at 21% versus domestic demand at 10%. So, whether you're flying within the country or outside, chances are seats are tough to get or will be tough to get, and prices could be trending higher. There is good reason for the domestic part, of course. Asia Pacific Airlines saw a 45% increase in Jan 2024 traffic compared to 23, and the big jump, not surprisingly, was driven by China, which had started opening up in Jan 23. So within the region, IATA says recovery in major international routes to and from Asia Pacific are still lagging, but Asia Middle East have exceeded pre-pandemic levels. Speaking of Middle East, we've said earlier how airports like Dubai are nearing their pre-pandemic record traffic levels of 89 million set in 2018. Last year, Dubai saw 87 million visitors, crossing the 2019 figure of 86 million. Meanwhile, passenger load factor, now this is back to IATA figures, a good indicator of how airlines' bottom lines are doing, was almost 80%, marginally higher than the same month the year before. Willie Walsh, IATA's Director General, said that 2024 was off to a strong start despite economic and geopolitical uncertainties, and that they would be looking to governments for policies that help aviation to reduce costs, improve efficiency, and make progress towards net zero carbon dioxide emissions by 2050. Finding India's consuming class. Estimating the size and buying power of Indian consumers, and by definition understanding consumer markets as a whole, is a favorite pastime for many, mostly to see how people have got it wrong and repeatedly so. Business analyst and a long-time observer of the Indian consumer, Rama Bijapurkar, is back with a fresh book called Lilliput Land: How Small is Driving India's Mega Consumption Story. I caught up with her for the Core Report's weekend edition that plays out on Saturday, and one of the questions I asked, of course, is what had changed amongst Indian consumers and what were the differences that she was seeing, and of course the famous rural-urban mix.
Many narratives. Welcome to India. One lot believes that all of rural India is poor. So when rural India starts doing well and consuming more motorcycles or smartphones or whatever, everybody's saying, "Oh wow, India's got richer." I think that's wrong. There's a fallacy there. Then there are some people who are saying that I will focus on peri-urban, semi-urban, because also our urban-rural definitions, as has been written about, are a little bit dodgy and need to be changed. So many people are saying, let's look at peri-urban, semi-urban, urban, which is that twilight zone between the urban and the rural. And let's look at that, and that is our primary focus, and we will drive rural from there, which is the second way in which people are looking at it. And then there are others like Hindustan Unilever and Jio who are saying the world is my oyster, I want every single person. And so they are actually going down to the smallest villages. Hindustan Unilever was the first one actually who did a census of all the villages many, many, many years ago, well before there was any official data and maps and all the good stuff we have. Now they're actually going down and actually plotting and trying to serve those retailers better. So I think those are the sort of three things. The fact that rural India does well is often because half of the rich people are in rural India.
And do they consume similarly between, let's say, the rich in rural
I think
versus
that's
rich in...
what's changed over time. What's changed over time is, and it's been even Dipankar Gupta many years ago wrote a thing called The New Villager, and he said we have to reprogram our heads of who the new villager actually is. So now with road connectivity being really good and with everybody watching the same stuff, mentally, physically, and the census towns. I remember doing a study once for a fertilizer company that wanted to get into retail, and I went to this village in Andhra Pradesh and I kept asking her questions, and she said, do you think I'm in the dark ages? She said, there's this nearby town, there's a supermarket there. I give my husband a list and it comes and he brings it back, and he said, my children, they have 5 meals that I pack for them in the morning. They go by tempo to the nearest town, and so I'm not a villager. So I think this village roads are often better now, as we know, than non-village roads, than Marine Drive roads.
Marine Drive for sure.
Yeah. So yeah, I think the coalescing is coming much closer together.
Okay, so there is a coalescing in the income bracket for sure,
And in the mind space.
What is not coalesced?
What is not coalesced is, well, the incomes are overlapping, but there is a large lot of people in rural India who do not have. Also, if urban income starts here, rural income starts here. So if you only want that part of urban income, then you don't want large swaths of rural income. So I think what's changed is income. I think occupation, people believe, and that's, I think, the myth of urbanization for us, that people believe that if you're moving to cities, then you live in nicer houses, you have better infrastructure, you have more value-added jobs. That is not true. Because the average migrant worker lives worse than he does in the village. The only difference is that if you segment people based on chutzpah, for lack of a better word, or gumption, if you have the gumption in a city, you can walk 5 dogs in the morning, 5 dogs in the evening, groom them in the afternoon, and still make a lot of money, right? If you learn how to do particular kinds of blinds and so on and so forth, you can attach yourself to a furnishing shop and you can do that. You can attach yourself to an urban company and you can actually get to places. I think that's so. If you have the gumption, there are more opportunities in the cities. But even now, a lot of stuff is coming up in the peri-urban village area.
So let's say in the last few years, we look at sales numbers of large consumer product companies. I'm talking about large ones now. And maybe we should also look at regional players who are battling these large ones and use that as some kind of proxy to say, okay, is there strength of consumption, or what is consumption, what are consumption patterns like right now, and so on. So that is telling us a certain kind of story right now. Now, do you feel that marketeers have perhaps either wrongly interpreted or overinterpreted these consumption numbers when it comes to gauging demand?
I think barring a handful of companies, most companies do not want all of India. They want the lovely GDP, but they actually only want the sliver that has above a particular income.
And they've arrived there because they've made mistakes elsewhere, or you feel they've been sharp enough to...
One is quite simply, no CEO wants to tie up his bonus to a low margin, high volume business. Okay, I mean, the world is full of people who've been sacked for... It's obviously a more risk. Secondly, if you remember India Inc., a lot of the big players went off overseas to invest overseas. Now, you go overseas while talking about in Davos, the largest, with the largest population, the youngest population, etc., etc. And guess what? I'm not investing for this. I'm going abroad. Then the going abroad picnic kind of finished.
Yeah. Mid-2000s, I think, was when, yeah.
Yes. And then everybody came back and said, let's start looking at this. In the meanwhile, the creamy layer got a little more creamy. I think that's a fact. I call it why... The mentality is, the politically correct version is, why kiss the frog and wait for him to become a prince when you can kiss the prince directly? And even for the top end, we've actually not invested big. We're running out of capacity even for the top end. I think if you had more, more Roros, more high-end beauty salons, more yacht parking spaces, more travel experiences. I mean, for love or for money, in peak time, you cannot get space. We can't enter our airports. We're already running out. So we're suddenly finding that the top-end demand is also huge and humongous demand. And as a result of which, I think there is no need or motivation to go below. So it is the battle for dreams in a sense, and the fact that it is, why should we, in fact, I've asked this question many times in the mass or class debate, why should we even bother with the mass of India? Companies are asking that, which is why they've left the space wide open to small, going back to Lilliput land, small ka Raj hai, because the big guys don't really want that space.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.